So let's talk about some numbers. So we're looking at 2Q. We already have deliveries. We know that from the fourth quarter of 19 to the second quarter of this year, Tesla's market share in Europe has fallen from 33% to 15%, even down from 1Q. In China, their growth market, from the first quarter of 20 to the second quarter of this year, their market share has fallen from 23% to 11%. So in the two of the three largest global markets where you have competition, Tesla is ceding significant market share. So I think that's going to be a key point of focus. Now, if we take a step back and look at the numbers and we can get into this, I think there's risk to the consensus estimate because while they sold more cars, their biggest credit customer, Stellantis, keep in mind, Tesla has never made money in any single year, excluding credit sales. Their biggest customer unexpectedly early in 2Q said, we're no longer buying credits from Tesla. So we can get into the numbers, but we think there's a potential miss in the offing when they report earnings after the close.
All right. One thing I want to touch on, just because it's definitely a factor on the markets today, Bitcoin is up big this morning. We're seeing it's up over 39,000. The stock fell hard after they announced their Bitcoin investment, but with Bitcoin back up, we saw Bitcoin actually even spike after Elon Musk, Cathie Wood, and Jack Dorsey had a little chit-chat about it at the B-Word conference. Any chance that this surge in crypto could just give an additional, I know you're not seeing a boost, but give an additional boost to Tesla's stock at earnings?
That's a great question. So I want to look at my notes here. So let's just get into the numbers. So again, we think there's going to be a roughly $200 million benefit to their gross profit from selling more cars. However, in the quarter, the way you account for Bitcoin, they're going to take about an $85 million charge on the Bitcoin investment they have in the second quarter. In addition to that, we think that the credit sales are going to be $200 million less than what they did in 1Q. And we think there's going to be a margin hit for them actually having to produce Model S and X cars in 2Q versus not producing in 1Q. So the number, the kind of back of the envelope number we're looking at, non-GAAP net income, we're seeing a number close to $985 million, whereas the street's at $1.1 billion. So to your point, Bitcoin is actually going to be a headwind for them in 2Q when they report numbers after the close. So we think that's actually going to work against the company, not for them. With respect to today's move, I think people want to see how it moves through the quarter because the way you account for it is you market to market at the lowest price any individual day in the quarter. So one day's move we don't think is going to be big enough to really help the company.
So, Gordon, I'm going to say this, and don't take it the wrong way. You're a bit of a contrarian, obviously. You have a different take than most of the street. Most of the street sees Bitcoin, not Bitcoin, I'm conflating them right now. Tesla having a very strong quarter with revenues up about almost 89% year over year. One thing I want to look at is deliveries. We've seen sequential improvement and year over year improvement in deliveries from Tesla. 185,000 in Q1, over 201,000 in Q2. What number would actually be impressive to you and for kind of meet the expectations that you have and also investor expectations?
Yeah, again, that's a great question. Let's take a step back. So look at Tesla trading at about 100 times earnings, 100 times earnings versus the auto industry average of about 6 to 7 times earnings. That's not a mistake. That's real. So you think about it. Last year, Tesla sold 500,000 cars, right? VW, who's Tesla's valued at a multiple, right? Their market cap is a multiple of VW, sold 13 million cars. So already in this valuation, Tesla is being valued as if it's growing its deliveries 100, 200% per quarter. That's what the valuation suggests. So going from 185,000 cars to 200,000 cars, while impressive to some, if you look at their valuation, I think is a disappointment. So we need to see this company get to multiple millions of cars sold per year to justify even half of its current valuation, and it's just not there. And I think as the market realizes, Tesla, when they see competition, China, EU, where they're ceding significant share, as the market realizes they're no longer going to get these credit revenues that they've gotten that have been the bolus of their profit, I think the valuation is going to come down tremendously. And when you look at it, look at GSX, right? Look at these Chinese online education stocks. When the market comes to realities, drastic things can happen. And we think over the next 12 months, that's going to be the case with Tesla.
All right, Gordon, before we let you go, one last question. Obviously, that the Chevy Bolt news made a lot of headlines last week, a lot of concerns about those batteries. Is that a potential headwind or tailwind for Tesla as it tries to attract people to electric cars? Do you see people gravitating towards the Tesla brand because they haven't had those issues? Or do you think that makes consumers more wary about electric vehicles in general?
Great question again. So GM was aware of 8 spontaneous fires in their cars, 8, and they pulled their entire line. Over the weekend, we tweeted about 200 Tesla fires that one of our contacts has counted 200 fires, 200 fires, and they haven't done one recall. So I think this is a bigger risk to Tesla versus, a potential benefit. Because if you look at the amount of fires they've had without one recall, one could argue that the regulators in the U.S. need to potentially look into this and start doing their homework.
Shepard Smith here. Thanks for watching CNBC on YouTube.